method is concerned, under this method, we need to open two different accounts. One is the partner's capital account, and then there will be the partner current account. Okay. So under the capital, under partner's capital account, we record the opening balance of the capital, and then we also record any transaction that leads to the addition in the capital balance of the partner. Like if partner have further introduced certain amount as their capital, then that will also be recorded on the credit side of the capital account. Apart from the additional capital, we will record the drawings on the debit side if drawings have been made out of capital. Okay, so this is it. This is it. All these transactions are only recorded in the capital account as per the fixed capital method. And for the other transaction, for the other items, we prepare the partner's current account. Okay, so this is how the partner's capital account looks under the fixed capital method. You can see on the right hand side, we have the opening balance BD, then additional amount of capital. And on the left hand side, we have the drawings, which you have to remember that only those drawings will be recorded under the partner's capital account, which is made out of capital. After that, we also understood how to prepare the partner's current account, wherein I have told you that partners, in order to prepare the partner's current account, we will first of all start with the opening balance as per the opening balance of the current account. Then all other items like salary, commission, interest on capital, and P&L appropriation amount will be recorded on the credit side, and the drawings, if made out of profit, will be recorded on the debit side, and interest on drawing will also be recorded on the debit side. And then finally, we will find out the closing balance of the partner's current account. So we have already discussed all these things in the previous class, and we also did question number 28 in the previous session. And then we also tried doing question number 29. And I think I have given you one question as your homework. So is this the question I gave you for homework, Kabir, Zoravar, and Paru? Or we have completed this in the class?
Sir, we have completed it in class.
So then I guess I must have given question number 31 for your homework. Right?
Yes, sir.
So all of you tried this question. Anyone having any problem solving this one?
Sir, I have a doubt in the division of profit.
You have a doubt in the division of profit.
Yes.
So what is the point regarding the division of profit? In point 5 you have problem? Item
Yes.
number 5. Okay, so
yes,
it says that profit to be shared in the ratio of their capital up to 175,000 and the balance shall be divided equally. So tell me, Alexander, what is the total amount of profit as per the P&L appropriation? What is the divisible profit as per your calculation?
Sir, I haven't calculated because my interest on drawing was wrong. I forgot.
Okay, no problem. So shall I show you the correct P&L appropriation for this particular question?
Yes, sir.
So see, this is the P&L appropriation that we will have to form in for this particular question. I would request all of you to tally your solution with the P&L appropriation I'm showing on screen. And if anyone having any doubt or problem, you can ask me. Then we will move to the partner's capital account.
Sir, why are we subtracting 1500 from the net profit?
Why are we subtracting 1500? Okay, so 1500 must be the interest. Just let me check. Give me a moment. I have to read the question again. I don't know why we are subtracting 1500. I think I'm missing some point here. Let me check the question. X and Y entered into partnership on 1st April. Okay, and their capitalists. Okay, see, Mr. X have given a loan of 50,000, right, Alexander?
Yes,
In the
teacher.
third line, it is written on 1st of October 2020, X gave a loan of 50,000, right? And in this situation, the rate of interest on loan hasn't been decided between the partner. So whenever loan is given and the rate of interest is not decided, then in such a situation, the rate of interest applicable will be 6% per annum, right?
Yes, sir.
Okay. So what we have done, we have calculated 66% on 50,000, right? So 6% of 50,000 will be 3,000, right? But interest will be charged for a 6-month period since the loan has been given on 1st of October. So it will attract the interest of 6 months only, from starting from 1st October till 31st of March. Is this clear to you?
Yes,
So
sir.
from 1st October, we will be charging interest till the 31st March. So the rate of interest will be 6% and the amount is 50,000. In that case, interest will be 1,500. Is that clear to you?
Yes, sir.
Now, I'm sure that you remember that interest on loan is a charge against profit. Okay. So all those expenses which are considered as charges against profit need to be subtracted out of profit before writing the profit in the P&L appropriation. So profit which is given in the question is 50,000, sorry, for 4,61,000. But this profit is before charging interest on loan. So in order to write down the profit in the P&L appropriation, what do? We must subtract 1,500, that is interest on loan, out of this profit, 4,61,000. Is this clear to you now?
Yes, sir.
Is this clear to everyone else?
Yes, sir.
Okay. Oh, and tell me, all other items are clear to you, like apart from profit and loss account. Profit will be 4,59,500. Then there will be interest on drawing. X interest on drawing will be 5,000 and Y's will be 6,250. And let's talk about interest on capital. So interest on capital will be 24,000 and 18,000. So that means total interest on capital will be 42,000. And X will get a commission of 5%, right? So 3,50,000 into 5%. That means he must be getting a commission on the sales value, right? So total sales value is 3,50,000, and we are giving him a 5% interest, 5% commission. So 5% commission on 3,50,000 will be 17,500. And then we have also given salary to Mr. X and Y, and we have transferred certain amount to the reserve. 50,000 has been transferred to the reserves. Is this clear, everyone? Do I need to explain anything here? The calculation of reserve is also clear to you?
Sir, can you show the calculation of interest on drawings? I have a small doubt.
With a small doubt. Okay. Just tell me the amount of drawings for X and Y. Amount of drawing is 1 lakh and 1,25,000 respectively, right?
Yes.
And the rate of interest on drawing will be, is this given? It is given in the question. Yes. So interest on drawing is 10% per annum. Is that right?
Yes.
So 10% of, first of all, we will calculate 10% of 1 lakh. Is that correct? It will be,
Yes.
it will be
10,000.
10,000, right? But since the date of drawing is not given, and I have already taught you that whenever the date of drawing is not given, we will charge the rate of interest for half year only, for the period of 6 months only. Is that clear to you? So we will multiply 1 lakh into 10% into 6 upon 12. Alexander, is this clear to you now?
Sir, when what is not given?
Sorry?
When what is not given, we
The
have to.
date of drawing is not given.
Oh, okay.
See, in the question simply says that the partners have withdrawn 1 lakh and 1,25,000. But on which date they have withdrawn this fund? Whether they have withdrawn this fund at the very beginning, or whether they have withdrawn at the middle of the year, or at the end of the year, or whether they have withdrawn this fund throughout the year month wise, or how they have withdrawn, this is not given in the question. So whenever the date of drawing is not given, we will simply presume that the interest will be calculated for half year only. That means for 6 month period only. Is it clear now?
Okay, sir, clear now.
Clear. And on the debit side, you can see the reserve. We have made a reserve of 50,000 as well. So the calculation of reserve is also clear to all of you.
Sir, can you show it again? The reserve calculation.
Calculation of reserve. So question must have mentioned somewhere that the that we need to prepare a reserve. Let me check. I have to check. There was a profit before charging. Okay, so the first item in the question says, see here, the first item says 20% of the profits. 20% of the profit before charging interest on drawing, but after making appropriation to be transferred to general reserve. What is the meaning of this statement? This statement basically says that we need to prepare a reserve of 20% of profit. But which profit? Profit must be calculated by subtracting all kind of expenses. Profit must be calculated by subtracting all expenses except the interest on drawing. Okay, so interest on drawing shall not be subtracted. So say here I have made the working note. In the working note, you can clearly see the net profit is 4,59,500 after deducting the interest on loan. See, 4,59,500 is the net profit, right? So out of this, we need to subtract all the expenses. 42,000, 17,500, 60,000, and 90,000. See, we have subtracted all the expenses, 40 to 17,500, 1,50,000, but without taking into consideration the interest on drawing. So that means we are not required to add this interest on capital in this profit, but we will subtract all the expenses. So the question, this is what the question was saying. 20% of the profit need to be transferred to the reserve. But how this profit will be calculated? Profit will be calculated before charging interest on drawing, but after making appropriation. Appropriation basically means after after subtracting all kind of expenses. Is it clear to all of you now? So see, after subtracting all the expenses, we will get a profit of 2,50,000. And on this 2,50,000, we will simply make a 20% reserve, that will be 50,000. Tell me everyone, is this clear or not?
Yes, sir, clear.
If anyone
Yes, sir,
wants
it's
me to
clear.
do this question, I can prepare the P&L appropriation partners capital in the current account for you. But since I have given this question as homework, so I presume that all of you must have tried, and all of you are able to understand this through the PowerPoint only. But if anyone wants me to do this question, I can do this as well. Okay, so after writing the value of the reserve, we will calculate the divisible profit. So divisible profit will be 2,11,250. 2,11,250. Now see item number 5 in the question. What item number 5 is saying? Item 5 in the question says that whatever the profit, whatever the divisible profit be, we will divide 1,75,000 in the capital ratio of the partner. So what was the capital ratio of the partner? They have contributed 2 lakh and 1,50,000. That means their capital ratio is 20:15. Can we say that? If they have contributed capital in, as 2 lakh and 1,50,000, so can we say that their capital contribution ratio is 20:15? Will it be correct or not?
Yes, sir.
Alexander, okay, see what I'm saying. Their capital contribution is 2 lakh and 1,50,000. So can we say their capital contribution is 20:15? Answer is yes. We can say that 20:15 is the This is their capital ratio. So out of 2 lakh, 11,250 rupees, we will first divide 1,75,000 in their capital ratio to 20:15. And then whatever the remaining profit will be left, we will divide the remaining profit equally. I think we have done a similar question in the few sessions back. Tell me, Alexander and everyone else, is this point clear to all of you? Do I need to
Yes.
explain it again? Ziba and everyone else, please tell me. Guys, come on. Tell me.
Sir, can you explain it again?
Just
So can you explain this?
yeah, sure. Just give me a moment. See, I'm sorry. Everyone is able to understand that the divisible profit after subtracting all kind of expenses will be 2,11,250. This point is clear to all of you or not?
Yes, sir.
Yes, sir.
So
Yes, sir.
2,11,250. Two lakh 11. So 2,11,250. Question is saying that out of 2,11,250, 1,75,000 needs to be divided among the partners. Divide among partners in their capital ratio. In their capital ratio. And remaining amount of profit. So what will be the remaining amount? Let me show you. Let me open my calculator. So out of 2,11,250, when you will subtract 1,75,000, the remaining amount of profit will be 36,250. So this, the remaining amount of profit need to be divided equally among the partners. Okay. So first of all, let's divide 1,75,000 in the capital ratio of the partner. Now the question arises, sir, what is the capital ratio of the partner? See, who were the partners? Mr. X and Y. X and Y were partner. X and Y were partner. X have contributed capital as 2 lakh and Y have contributed 1,50,000. So can we say that their capital ratio is 20:15? Can we say that 20:15 is their capital ratio? Will it be correct or not?
Yes,
Tell me,
sir.
guys. Yes, we can say that.
Yes.
Now, so since their capital ratio, we are able to find out their capital ratio. So what can we do? We will simply multiply 1,75,000 into 2 by 35. 2 upon 30, 20 upon 35 to find out the X share of profit in 1,75,000. Similarly, Y share of profit in 1,75,000 will be calculated like this. 1,75,000 into 15 upon 35. Is this correct? See, let me show you what will be the profit. 1,75,000. 1,75,000 into 20 by 35. So 1 lakh will be X share. Okay. And similarly, 75,000 will be the share of the other part. Is this correct, everyone?
Yes,
And
sir.
now see the remaining profit. What is the remaining profit? Remaining profit is 36250. This need to be divided equally. So let's divide this value equally. So 36250 divided by 2. This will be 18125. 18125 and 18125. Okay, so if I ask you what is the total profit of Mr. X, then can you say that the total profit of X will be 1 lakh plus 18125? Can we say that, yes or no?
Yes, sir.
Yes. So the total amount of
Yes.
profit will be 1,18,125, and for Mr. Y it will be 93,000. How much it is? 125. Understood, everyone? Is this clear to all of you?
Yes, sir. Clear now.
Yes,
That is
sir.
what we have done in the P&L appropriation account also. We have calculated their profit to 11,250 and then divided initial first 1,75,000 in their capital ratio, and remaining has been divided among the partners in their equally. Okay, so I presume that all of you understood this. So I'm moving to the next part. In the question also requires us to prepare the partners capital account. Okay, so we have prepared the partners capital account like this. So opening balance of the partners capital will be written here 2 lakh and 1,50,000. Interest on capital 24,000 and 18,000. Then salary and commission will be written, and finally the P&L appropriation. The amount of profit that is divided among the partners will also be recorded on the credit side of the partners capital account. And after that, we will write down the value of the drawings made by the partner and the interest applicable on such drawings. And then finally, we will calculate the balance of the partners capital account. This will be the closing balance of the partners capital account. Everyone, is this clear to all of you?
Yes, sir.
Yes, sir.
So this is the question that I gave you in the last class. And so hope all of you understood this, and I'm sure that all of you now completely understand the formation of the capital account. So since we have completed this particular concept and the topic, now we will be moving to our new concept, which is called the calculation of interest on capital. So in today's session, we will do few questions based on the calculation of interest on the capital. I want everyone to put this heading on your notebooks: calculation of interest on capital. So in this topic, what we gonna discuss, we will be talking about, first of all, how do we compute the interest on capital, number one. And then we will also talk about how do we pass the journal entry for the interest on capital. Okay, so the two things we are going to discuss here. First of all, we will talk about the calculation part. First of all, we will talk about the calculation of interest on capital. So first of all, we will talk about how do we calculate calculation of interest. No need to write it down. Just try to understand. Calculation of interest on capital. This is the first thing that we will talk. And then we will also learn how do we pass the journal entry regarding the interest on capital. So these two things will be the point of consideration in today's session. So in order to understand this, let's continue with a question. We will try to understand the calculation of the interest on capital as well as the general entry that we are required to pass for the interest on capital. So we will understand both these things through a question. So let's start with question number 32. Okay, so I want everyone to read this question. Amit and Brahmit started business on 1st of April 2020. Okay, with a capital of 15 lakhs and 9 lakhs. On 1st of October, they decided that their capital should be rupees 12 lakh each. The necessary adjustment in capital were made by introducing or withdrawing by check interest on capital allowed at 8% compute interest on capital for the year ended 31st March 2021. Okay. So the question is saying that there are two partners, Amit and Ramit, and they are contributing. They have basically started. You can say they have started the business with an initial capital of 15 lakh and 9 lakh. All right. So at the beginning of the year, they have their capital balances is 15 lakh and 9 lakh. But during the year, on 1st of October, they suddenly decided that their capital should stood at 12 lakh each. Both the partners should at least contribute 12 lakh, and they have decided if any one of them have contributed in excess of 12 lakh, such amount shall be withdrawn by way of check. And if any person have not contributed sufficient, if any partner have contributed less than 12 lakh, then such partner need to contribute the further capital by way of check. All right, is this clear to all of you? The question is clear to all of you.
Sir.
Yes, sir.
Let me repeat it again. There are two partners, both are contributing 15 and 9 lakh at the beginning. Their capital balances stood at 15 and 9 lakh, but during the year, at the middle of the year, they suddenly decided that their capital balance for both the partners, it should be 12 lakh each. And further, they decided that the necessary adjustments will be made. That means if any partner have contributed in excess of 12 lakh, he must be given an authority to withdraw the excess amount. And if any person have contributed less than 12 lakh, then such partner need to introduce further capital. Okay, the question asks us to calculate the interest on the overall capital at the rate of 8% per annum. Okay, so let me show you how this will be done. So first of all, we will talk about how do we calculate the interest on capital. But for that purpose, let's just try to understand the timeline. Let's just try to understand this timeline. Let's suppose this is the beginning of the year, and year as per accounting rules start on 1st of April. Okay, so let's suppose the year started on just a minute. The year started on 2020. Year started on 2020. And when the year started, their capital balance for Amit, the capital balance was 15 lakh, and for Ramit, the capital balance was 9 lakh. Okay, but in the middle of the year, as on 1st of October 2020, both the partners suddenly decided that capital must be how much? It should be 12 lakh each. 12 lakh for both the partners, for A as well as B. Okay. Now question asks us to calculate the interest on capital. Now tell me, year must be ending on 31st of March 2021. Okay. So can we say that, try to understand this timeline and answer me. Can we say that this 15, the interest on capital, interest on 15 lakh will be charged for the period of 6 months? Can we say that interest on capital, I'm talking for in respect of partner A only. So since the partner A have maintained a capital balance of 15 lakh till 1st of October, and from 1st of October onwards, both the partner have decided that they will be maintaining 12 lakh as their capital. So can we say that Mr. A have maintained a capital balance of 15 lakh for the first 6 months? Will it be correct? Yes or no? And for the remaining 6-month period, he have maintained a balance of 12 lakh. Is that correct, everyone?
Yes, sir.
Yes, sir.
I'm talking about Mr. A only. Let me repeat it again. If this is the timeline of the entire year, this is the beginning of the year. At the beginning of the year, their capital stood at 15 and 9 lakh. At the middle of the year, they have decided to maintain a capital balance of 12 lakh each. We need to calculate interest on capital, whatever the capital they have maintained throughout the year. So can we say that Mr. A have maintained a 15 lakh capital balance for the first 6-month period and 12 lakh capital balance for the next 6-month period? So and similarly, we have maintained a capital balance of 9 lakh for the first 6 months and 12 lakh as the next 6-month period. So for that purpose, taking into consideration these things, we will be able to calculate interest for partner A. Interest, let me show you the calculation of interest on capital. Interest on capital. Nobody needs to write it down. Just try to understand. Interest on capital for partners. Partner A, that is Amit, will be getting a interest on capital first of all on 15 lakh. He will get a interest at the rate of 8%, but for only how much? How many months? 6 months. 6 upon 12. Then he have maintained all throughout the remaining years, all throughout the remaining period of the year, 12 lakh balance. So on this particular amount as well, he will be getting a 8% for the remaining 6-month period. Okay, so 8% of 15 lakh will be 8% of 15 lakh will be 10,000. Sorry, 1 lakh 8,000. 1 lakh 8,000 will be the interest on capital for this period, and for the remaining period it will be just a minute, let me calculate. I think I have made a mistake. So 15 lakh into 8% and into 60,000. 60,000 will be the interest on capital for this particular portion, and for the remaining amount, interest will be 1,20,000 into 8%. This 12 lakh into 8%. 48,000. So the total amount will be 1 lakh 4,000. Sorry, 1 lakh 8,000. Tell me everyone, is this clear to all of you? The calculation for interest on capital for Amit is clear to all or not?
Clear, sir.
Definitely.
Clear. Now similarly, we will calculate the interest on capital for Brahmit as well. So for Brahmit, the calculation will be similar. For Brahmit, we will calculate the interest for first 6 months will be calculated on 9 lakh. On 9 lakh, we will be charging interest at 8%, and the rate of interest applicable will be 8%. For how many months? For only 6 months. And then on the remaining amount, 12 lakh, 8% into 6 upon 12. Okay, so on this amount, 9 lakh, 9 lakh into 8%, it will be 36,000, and this will be 48,000 obviously. So the total amount will be 84,000. This will be the total amount of interest payable to Brahmit on his capital contribution. Is this clear, all of you?
Yes, sir.
This is clear. Okay. So I'm showing you the solution. I want all of you to write it down quickly. See, this is the solution. So on 1st of April, the capital stood at 15 lakh and 9 lakh, and on 1st of October and onwards, their capital balances A's capital is 12 lakh and B's will also be 12 lakh. I want you to write it down, and then I'll show you the calculation slide, and then we will talk about the journal entry.
Sir, wait, sir, let us write.
Done, everyone?
Yes, sir.
Please write it down as well. Write this down as well. Done, everyone? Please let me know so that we can move to the next slide.
Yes, sir. Done.
Yes, sir. Done.
Done. Now let's talk about the journal entry. So, for the interest on capital as well, we need to pass two entries. First, journal entry will be made when the interest gets due. That means on the due date of interest. So on the due date of interest, the journal entry will be interest on capital account debit to partners capital account. Why we are debiting interest on capital? Since interest on capital is a kind of expense from the business point of view, from firm's point of view. Therefore, interest on capital will be debited, considering it as an expense. And similarly, partners capital account is getting basically the capital balance of the partner will increase by the amount of interest on capital. So it is considered as an income for the partners. Therefore, we are crediting the partners capital account because it is going to increase their capital balances. So interest on capital account debit to the partner's capital account. Obviously, here the name of the partner will comes. For example, if the partner in our question, the name of the partner was Amit, so we will write down interest on capital account debit to Amit capital account to Brahmit capital account. Okay, so this will be the general entry when interest is due. And similarly, the general entry when it get transferred to the P&L appropriation. I'm sure that all of you already know that interest on capital is recorded in the P&L appropriation account, not in the profit and loss account. It will be recorded under P&L appropriation. So since it is recorded under P&L appropriation account, so we need to transfer it into the P&L appropriation account. So when you will transfer it into the P&L appropriation account, the general entry in that case will be profit and loss appropriation account debit to interest on capital. P&L appropriation account will be debited to interest on capital. So these two entries will be passed. First is for the first is when the interest is due, and second will be made when interest is getting transferred to the P&L appropriation account. Okay, so I hope this is clear to all of you, right? Now let's understand how general entry will be done in this particular question. Let me show you the general entry. First of all, for when the interest is actually due, the general entry on that date will be interest on capital account debit to A's capital account to B's capital account. As I've told you just now on the notebook, that whenever interest is due, the general entry will be interest on capital account debit to A's capital to the partner's capital account. Since in our question we have two partners, so we will write down to A's capital account to B's capital account, and the A is getting a interest on capital as 1,08,000, and B is getting a capital interest on capital as 84,000. So now we will simply add these two values and we will get 1,92,000. And finally, when it need to be transferred to the P&L appropriation account, this will be P&L appropriate. Please make the correction when you will note it down. So profit and loss appropriation account debit to interest on capital. This will be the general entry when it will be transferred to the P&L appropriation. Clear, everyone? The general entry is clear to all of you? Alexander, Hiba, and
Yes, sir.
Yes, sir.
so all of you, please write it down quickly. Tell me as soon as you finish it, and then we will start with a new question. Done, everyone?
Yes, sir.
Okay. So let's start with a new question. Just a minute. So this is the next question, question 33. Let's read this question once. It says that Ram and Mohan are partners in a business. Their capital at the end of the year is 24,000 and 18,000. So their closing balances, their closing capital balances is given. During the year 2015-16, Ram's drawing and Mohan's drawing were 4 lakh and 6,000 respectively. Profit before charging, this is my mistake, this is before. Profit before charging interest on capital during the year was rupees 6,000. Okay. You need to calculate interest on capital at 5% per annum. Okay. Is this clear, everyone? The question is clear to all of you?
Yes, sir.
Profit made during the year is 16,000. Their closing capital balances is given. Drawings have been given. Okay. And question is asking us to calculate the interest on capital. So before starting this question, I just wanted to tell you that interest on capital is always and always calculated on the opening balance of the capital, not on the closing capital balance. Is this clear, everyone? The interest will be calculated on what balance? Opening balance, not on the closing balance. But the problem in this question is that this question gives us the closing capital balance. So what do we need to do? We will have to find out their opening balances. We will have to find out the opening balances of the partner. Only then we will be able to find out the interest on capital. Tell me, this is clear to all of you?
Yes, sir.
Okay, so let's start. And I don't want anyone to write it down. Just try to understand, pay attention, try to understand. So first of all, we will write down the particulars, and the name of partners is Ram and Mohan. Okay, Ram and Mohan. Okay, so we will be making a tabular representation. So first of all, the closing capital balances are given for both the partners. Their closing capital balance are 24,000 and 18,000. Okay, so 24,000 and 18,000 for Mohan. Okay, now what do we need to do? We need to find out the opening capital balance. Why do we need to find out opening capital balance? Because interest on capital will always be calculated on this balance, on the opening capital balance, not on the closing capital balance. So you need to you need to understand how can we reach to the opening capital. See, question says, if you have read the question carefully, question is saying that Ram has made a drawing during the year, and Mohan have also withdrawn certain amount of fund. So this fund must have been withdrawn out of their capital, right? This fund must have been withdrawn out of their capital during the year. So that means we will add back the drawings that they have made. Just to figure out their opening capital balances, what do? We will be adding back the drawings that they have made. So drawings that they must have made, during the year is 4,000 and 6,000. So 4,000 by Mr. Ram and 6,000 by Mr. Mohan. We have added this back. Okay. And question is also telling you at the very end, question says that in the second last line, it says that the profit during the year is 16,000. Okay. So tell me, closing capital contains the amount of profit or not? Closing capital contains the profit element or not? Answer is yes. Closing capital balance contains the profit element also. But the opening capital does not contain the profit element. So what do we need to do in order to find out the opening capital? We need to subtract the profit that must have been added earlier. Profit must have been added and it must have been included in the closing capital. But since we want to find out the opening capital, so whatever that has been included in this closing capital, we need to subtract it. And whatever that have been withdrawn out of this capital, we need to add it back. So we have added drawings and we are subtracting the amount of profits since it is already included in the closing capital. But as we want to find out the opening capital, and opening capital does not contain the profit element. So for that purpose, I am subtracting the profit out of the 24,000 as well. Tell me guys, is this clear to all of you or not?
Yes, sir.
Profit need to be subtracted. This is clear to everyone?
Yes, sir.
Okay. So the profit is 16,000 and the ratio of their profit sharing is not given in the question. Their profit sharing ratio is not given in the question. So we will simply presume that they are equal partners. So they must have shared this profit equally. So 16,000 must have been divided equally earlier. So what we will do, we will simply allocate the profit equally among the Ram and Mohan. So 4,000 for Ram and 4,000 for the Mohan. 16,000, no, I'm sorry, 8,000 should be, no? 8,000 and 8,000. Sorry. Okay, so now we will add drawings, we will subtract profit. So 24,000 plus 4,000, it will be 28,000, and subtracting 8,000 will be 20,000. And similarly for the Mohan as well, 18 plus 6 minus 8, it will be 16,000. Tell me everyone, is this clear to you? The calculation of opening capital is clear?
Yes, sir.
Okay. So guys, we are taking a 2-minute break. Then we will continue from this point, finish this question, and only then we will end our session. So all of you, please wait for 2 minutes. All right, everyone. So I have made this table to find out the value of the opening capital. So in order to find out the value of the opening capital, we will add the drawings, we will subtract the profit. And now we are in a position to find out the interest on capital for both the partner. So partner A, for Ram, the rate of interest will be 5%. Okay, so 20,000 we will charge 5% per annum. So it will be 1,000. And for Mohan, the rate of interest will be on 16,000 we will charge 5% for the entire year. Then and the rate of interest, okay, 5%, 800. Tell me, everyone, is this clear to all of you?
Yes, sir.
Okay. Now, after calculating the interest on capital, we need to pass the general entries for interest on capital. So first of all, the first general entry will be for the interest due, and that will be interest on capital account debit to Ram's capital account to Mohan's capital account. Okay, so Ram's capital account will be credited by 1,000. Mohan's will be credited by 800. So total interest on capital will be 1,800. After that, we will pass the general entry for the transfer of interest on capital to P&L appropriation. So the general entry will be P&L appropriation account debit 1,800 to interest on capital. Tell me, everyone, is this clear to all of you? The general entry is clear to all of you?
Yes, sir.
Yes, sir.
Okay, so this is it. So this was the question. I want all of you to take the screenshot of the solution, since we are out of time, and I need to start the second session with the other students. So I want all of you to take the screenshot and later write it down in your notebooks. Please take the screenshot of the solution and the screenshot of the general entries as well. This is the general entry. Done, everyone? Done, all of you?
Yes, sir.
Okay.
Yes.
So guys, this is it for today's class. We will talk more about the calculation of interest on capital in the next session, and probably we will start a new concept in the next class as well. That might be the guarantee of profit or something related to that. So this is it for today's session. Thank you so much, everyone, and we'll see you in the next class. Till then, take care, all of you. Goodbye.
Okay, thank you, sir. Bye-bye.
Bye. All of you can sign out, please, and except Halima. Halima will stay here. All other can sign out. Hi, Halima. Good evening. How are you?
Good evening, sir.
So, Halima,